All right, so you want to talk about BITO.
The ProShares Bitcoin Strategy ETF.
That's the one. You sent over a ton of research.
Uh-huh.
So I'm guessing you're looking for like the full deep dive on it, but maybe without like getting too lost in, all the ins and outs of crypto.
Yeah, exactly.
Sweet. Well, let's jump in. BITO, it's kind of a big deal, right?
It was huge when it first launched.
Yeah.
Back in October 2021, it was actually the very first U.S. Bitcoin-linked ETF.
Wow, the first one.
Yep.
Okay, so how would we explain this BITO thing to someone who's maybe not that familiar with cryptocurrency? Like they've heard of Bitcoin, but they haven't really gone down the rabbit hole yet.
Okay. So imagine you want to invest in Bitcoin, but you don't want to deal with all the hassle of setting up a crypto wallet
Right?
and figuring out how to use those cryptocurrency exchanges.
Yeah, it can be a bit intimidating, right?
Right, exactly. So BITO lets you tap into Bitcoin through your regular brokerage account. You buy shares of BITO just like you'd buy shares of like Apple or Google.
Okay, so it's kind of like a Bitcoin proxy then.
Yeah, you could say that.
Yeah.
BITO's price is designed to mirror the movements of Bitcoin.
So if Bitcoin goes up,
BITO should go up too.
and if Bitcoin tanks,
BITO's probably going to take a hit.
got it. But here's the thing that I don't quite get. BITO doesn't actually hold Bitcoin, right?
That's right. It uses something called Bitcoin futures contracts.
Futures contracts. Okay, that sounds complicated.
It's actually not that bad once you wrap your head around it.
Okay.
Okay, so picture this. You think that Bitcoin is going to be worth $30,000 next month.
Right.
You could buy a futures contract today that basically lets you bet on that price. If you're right and Bitcoin hits $30,000, you make money.
Sweet.
If you're wrong and it drops, well, you lose money.
Less sweet.
Yeah. So BITO uses these futures contracts to try and anticipate where Bitcoin's price is going.
So it's kind of like they're making educated guesses about Bitcoin's future and using these contracts to try and profit from those guesses.
Yeah, exactly. It's all about trying to ride the waves of Bitcoin's price movements.
Okay, so with BITO, you're getting exposure to Bitcoin without actually, owning any Bitcoin directly.
Right, and that's a big draw for a lot of investors. It's like getting the benefits of Bitcoin's potential gains without the headaches of actually having to manage the cryptocurrency itself.
Now, this is where it gets really interesting to me. Most people would think you would just hold on to those futures contracts when Bitcoin is, on the rise.
Yeah.
But BITO, they hold them even when Bitcoin's going up, down, or just staying flat. So why are they always in strategy?
Well, that's because BITO is actively managed. They have a whole team of experts constantly watching the market, making adjustments to the portfolio, trying to maximize returns and manage risk.
So it's like a surfer who never gets off their board, just riding the waves, whether they're going up or down.
I like that. And to spice things up even more, BITO can also dabble in options on Bitcoin-related indexes.
Options. Okay, now we're getting into the really complex stuff, aren't we?
Well, yeah, options are a bit more advanced, but they essentially add a turbo boost to BITO's potential, both the good and the bad.
So more risk, more reward.
Yeah, you got it.
All right, so let's move from strategy to holdings. BITO, it holds mainly Bitcoin futures, as we've been talking about, and then there's also a good chunk of U.S. Treasury bills. That makes BITO's sector breakdown kind of unique, right?
Yeah, it does. That heavy allocation to U.S. Treasury bills gives BITO a pretty big weighting towards government securities. That's not something you typically find in, say, a tech-focused ETF.
Okay, and then there's the dividend. This is the part that really caught my eye. BITO pays out monthly, which is already unusual for ETFs. But then there's that annual dividend yield, 59.75%. That's insane compared to the ETF database category average, which is only 9.33%.
Right.
So what's going on here? What's driving this crazy high yield?
Well, there's a couple of things. First, BDO makes money by actively managing those Bitcoin futures contracts. When they make good predictions, they some of those profits get paid out as dividends to the ETF's shareholders.
Okay.
And then second, those U.S. Treasury bills that we mentioned, those are generating a steady stream of interest income, which also contributes to the dividend.
So it's like they're profiting from the Bitcoin side, and then they're also getting that stable income from the Treasury bills.
Right. But, and this is a big but, that 59.75% yield, it's not a guarantee. It can change, and sometimes drastically, depending on Bitcoin's performance and how well BITO's management team is doing.
Got it. So it's not like a set and forget it dividend. You gotta stay on top of it. You gotta keep watching how it's performing.
Yeah, because remember, BDO's performance, it's tied to the wild world of Bitcoin, and that world can be very unpredictable.
Okay, so let's look at how BITO has actually been doing. The data you sent me shows a return of like over 112% over the past year. That's impressive.
Yeah.
But it's also dipped about 2.8% in the past month.
Oh.
So what's your take on this recent performance? Should investors be worried about those recent losses?
Well, remember, Bitcoin is famous for its volatility. Its price swings directly impact BITO. So those recent losses, they're not that unexpected.
Okay.
It's the long-term trend that matters more, and that's been strong, like you said.
Okay. So it's like riding a roller coaster. You're going to have those dips and drops.
Uh-huh.
But as long as the overall trend is upward, you're probably going to end up higher than where you started.
Yeah, something like that.
All right. That makes sense. Now, speaking of things that can make investors nervous, let's talk about the expense ratio. BITO charges 0.95%. So for every $10,000 invested, you're paying about $95 a year in fees.
Right.
That's higher than a lot of other ETFs out there. Can you help our listener understand why that is?
Sure. That expense ratio, it covers the cost of the ETO's active management. All those strategic moves with the futures contracts and potentially options. It's true that it's higher than some of those passively managed ETFs that just track an index, without any hands-on management. But when you compare it to other actively managed funds that deal with futures, BITO's expense ratio is actually pretty average.
So you're essentially paying for like a team of experts to try and navigate this crazy Bitcoin market and help you make money, hopefully.
Yeah, that's the idea. You're not going to find a free lunch in the investment world.
Never a free lunch.
Nope. Higher potential rewards usually come with higher costs and, of course, higher risks.
Okay, so let's talk about what the analysts are saying about BITO. The research you gave me paints a pretty positive picture. Some even think BITO might be undervalued right now, predicting it could rise by over 20% in the next 3 months. But then there's this short interest thing. Currently, there are over 15 million shares of BITO being shorted. Can you explain what that means for those of us who aren't, Wall Street wizards, and how could it affect BITO's price?
Okay, so shorting a stock or an ETF like BITO, it's basically betting that the price is going to go down.
Okay.
These investors, they borrow shares, sell them at the current market price, hoping to buy them back later at a lower price and pocket the difference.
So they're kind of like betting against BITO.
Exactly. And a high short interest like we're seeing, it suggests that a good number of investors are skeptical about BITO's future.
Interesting. So it's like a tug of war between those who think BITO will go up and those who think it's going to crash and burn.
Yep. And the outcome of that tug of war, it can absolutely influence BITO's price. If the short sellers are right, the price drops, they make money. But if BITO defies those shorts and the price goes up, those short sellers, they might have to buy back shares to cover their losses, which could push the price up even higher.
Ooh, short squeeze.
Yeah, exactly. It can get pretty wild.
Okay, so a few news items from your research I want to touch on. First, BITO dipped below its 200-day moving average back in December.
Okay.
Second, we saw some pretty big outflows from the ETF in November and December. And finally, options for BITO in December 2025, those started trading back in November of 2024.
Interesting.
So what does all this mean for someone thinking about investing in BITO?
Okay, let's break it down. Starting with the 200-day moving average, that's basically a technical indicator that traders use to spot long-term trends.
Okay.
When an asset's price falls below that average, sometimes it's seen as a bearish signal, like a warning sign.
Okay.
But it's important to consider this alongside other factors, like the overall market sentiment, what Bitcoin itself is doing, broader economic conditions.
So it's not necessarily time to panic and sell everything?
No, not at all. Context is everything.
Okay, good. Now, those ETF outflows, that does suggest that some investors were getting a little bit spooked. Right?
Yeah, it could be because of Bitcoin's volatility, maybe some broader economic concerns. It's worth watching to see if those outflows continue.
Okay.
Or if they reverse.
And the early trading of options for December 2025.
Right. So that suggests there's definitely some interest in potentially profiting from BITO's future price moves, even those way out on the horizon. The fact that people were trading options contracts for December 2025 over a year in advance, it shows that there's some serious anticipation and speculation.
So they're basically placing bets on where BITO will be in a couple years, even though, the future is always uncertain.
Yeah, options trading is all about speculating on future price movements.
Mm.
And the emergence of those 2025 options, it shows that there's a lot of excitement around BITO's potential.
Okay, we've got to talk about the risks. Every investment has downsides, and it's crucial that our listener understands those before jumping in head first.
Absolutely. So let's break it down. First and foremost, volatility.
Right.
BITO is tied to Bitcoin, and Bitcoin's price swings can be wild.
Yeah, we talked about that roller coaster.
Exactly. So if you're someone who, constantly checks your portfolio and freaks out over every little dip,
Hmm.
BITO might not be the best fit for you.
Yeah, maybe not.
Another risk is tracking error. So BITO tries to mirror Bitcoin's performance, but it's not always perfect.
Mm-hmm.
Things like, the cost of managing those futures contracts, the timing of rolling them over, that can lead to slight differences between BITO's performance and Bitcoin's actual price.
Okay, so it's like a shadow that sometimes lags a bit behind the object it's following.
Yeah, that's a good way to visualize it.
Okay.
Then there's regulatory uncertainty.
Yeah.
The rules around cryptocurrency, they're always changing.
It's a moving target, isn't it?
It is, and changes in those regulations, they could impact B2 down the line.
So it's like navigating uncharted waters where the currents can shift without warning.
Exactly. There's always a chance that regulators could, crack down on Bitcoin or Bitcoin-related investments, and that could hurt BO.
Okay, what other risks should our listener be thinking about?
Counterparty risk.
Uh,
So this is something that's inherent in any futures contract. It's the risk that the other party in that contract might not be able to fulfill their obligations.
uh,
So, for example, if BITO enters a contract with someone who later defaults, the ETF could lose money.
okay, so it's like you're trusting someone to uphold their end of a bargain, but there's always that chance that they might not be able to come through.
Yeah, exactly. And then finally, there's the broader risk associated with digital assets.
Right.
Bitcoin is still relatively new. It's not backed by any government. It's not controlled by a central bank. Its value is driven entirely by market forces, which, as we've established, can be highly unpredictable.
So it's like venturing into the wild west of finance. The rules are still being written, the stakes are high, and the risks are definitely higher than with, those more traditional investments.
That's a great way to put it.
Okay, we've covered a lot of ground here. We've talked about how BITO works, its strategy, the potential upside, and importantly, the risks. But before we move on, I just want to make sure that our listener really grasps the concept of Bitcoin futures contracts, because those are really the heart of BITO's strategy.
Yeah, happy to dive back into that a bit further. It's a crucial element.
Let's revisit those futures contracts. I think it's essential for our listener to really understand how they work, how BO uses them to try and make money from those Bitcoin price movements, and what the potential implications are for their investment.
Okay, so imagine a farmer. They're about to harvest a ton of corn, but they're worried the price of corn might dry up before they can sell it all. So to protect themselves, they can enter into a futures contract to sell their corn at a set price today, regardless of what the market price is when the corn's actually ready.
So it's like an insurance policy for the farmer.
Yeah, exactly. It helps them lock in a price and get rid of some of that uncertainty.
Okay.
Now, in BITO's case, they're using Bitcoin futures contracts not to hedge against losses, but to try and profit from price movements.
Okay.
So if their management team thinks that Bitcoin is going to go up in the next month,
Uh-huh.
they might buy a futures contract at a certain price today. If they're right and Bitcoin goes up, they can sell those contracts at a higher price and make money for the difference.
So it's like a calculated bet on Bitcoin's future price.
Yeah, exactly.
With the potential for big wins if they get it right.
Exactly. But of course, there's also the risk of losing money if they get it wrong, and Bitcoin's price drops.
So high risk, high reward.
Yep. That's why BITO is considered a more aggressive investment, compared to like a traditional index fund that just tracks the stock market.
Right.
It's designed for investors who are comfortable with that volatility and who are looking for those potentially big gains.
All right, that makes sense. Now let's talk about the U.S. Treasury bills that BTO holds as collateral for those futures contracts.
Right.
Can you explain why that collateral is necessary and what it means for BTO's overall risk profile?
Sure. When you enter into a futures contract, you're making a promise, to buy or sell an asset at a future date.
Uh-huh.
And to make sure that both parties will honor that promise, they have to put up some collateral.
Okay.
It's basically a security deposit.
Okay.
And the BITO, they use U.S. Treasury bills as collateral because they're super low risk. They're very unlikely to lose much value.
So it's like a safeguard to make sure that BITO can fulfill its end of the bargain, even if Bitcoin goes crazy.
Exactly. It's a safety net that reduces the risk for both BITO and the other parties involved in those trades.
So even though BITO is trading these potentially volatile Bitcoin futures contracts, there's a layer of security in place because of that collateral.
Right. The collateral requirement helps to manage some of that risk that comes with futures trading.
Okay.
It doesn't eliminate it completely, but it's an important part of how BITO is structured.
Got it. So to sum things up so far, BITO is a way to gain exposure to Bitcoin without having to, dive into the messy world of cryptocurrency exchanges. But it definitely comes with its own risks,
Yeah.
especially those tied to Bitcoin's volatility.
Right.
So it's geared towards those investors who are okay with that volatility, who understand how futures contracts work, and who are willing to take on some risk in exchange for the possibility of bigger gains.
That's a great summary of where we are.
Awesome. Now let's look at some other key aspects of BTO that might help our listener make an informed investment decision. We've talked about some performance metrics, but I think it's worth looking at BTO's performance in different market conditions, how it compares to other Bitcoin investment options,
Yeah.
and what its history might tell us about its potential future performance.
It's a smart approach. Past performance doesn't guarantee future results, but it can give us some valuable insights.
Absolutely. So let's compare BTO to some other popular ways to invest in Bitcoin. There's the Grayscale Bitcoin Trust, or GBTC. That was one of the earliest Bitcoin investment products out there.
Right.
And then there are all these other Bitcoin ETFs that have popped up since BTO launched.
Yeah, lots of competition.
So how does BTO stack up against these other options, like in terms of performance, fees, overall risk?
Okay, so GBTC, that was definitely a pioneer, one of the first. But it has this history of trading at a premium or discount to Bitcoin's actual price,
Right.
which can add some extra complexity and risk.
Okay.
BTO, on the other hand, it aims to track Bitcoin's price more directly through its futures-based strategy.
So it's a more straightforward approach.
Yeah, you could say that. It potentially removes some of that guesswork involved with GBTC's, premium or discount.
Okay, that makes sense. Now, what about the other Bitcoin ETFs? There are a bunch of them out there now.
Yeah, there are. And they all have different approaches. Some, like BTO, they focus on those Bitcoin futures. Others, they actually hold Bitcoin directly.
Okay.
And then there are some that track a basket of Bitcoin-related companies.
Right.
So investors really need to compare the fees, the tracking methods, the risk profiles of these different ETFs to find one that matches their goals.
So it's not a one-size-fits-all situation. There's no single best Bitcoin ETF.
Yeah.
It depends on the individual investor.
Exactly. And it's also worth thinking about the bigger picture. Beyond just Bitcoin ETFs, there are other ways to get exposure to this whole digital asset space, like investing in blockchain technology companies,
Right.
or even just buying Bitcoin directly.
Okay, so let's zoom out a bit and think about B2 within a diversified investment portfolio. How should an investor approach allocating some of their assets to B2, and what are the key things they should consider when making that decision?
All right, well, you got to start with a solid investment plan.
Okay.
One that outlines your goals, your time horizon, your risk tolerance.
Right.
And once you have that framework, you can start figuring out how B2 fits into the picture.
Okay.
If you have a really conservative investment style, B2 might not be a good fit, just because of the volatility and Bitcoin's inherent risks. But if you have a higher risk tolerance, a longer-term perspective, B2 could work as a smaller part of a well-diversified portfolio.
So it's not like your core holding like a broad market index fund.
Right, exactly.
It's more specialized.
Yeah, it's a more niche investment. You're getting exposure to a very specific sector with the potential for big returns, but also higher risk.
Okay, and how much of your portfolio should you allocate to something like BO2?
Well, that depends. Your overall asset allocation is key.
Yeah.
How comfortable are you with volatility?
Right.
How much do you believe in Bitcoin's long-term potential?
Okay.
And how well do you understand the risks involved?
Right.
It's also, always a good idea to talk to a financial advisor who can who can help you figure out what's best for your individual situation.
Okay, we've looked at beta from a lot of different angles here, analyzing how it works, its potential, its risks, and its role in a diversified portfolio. But now I wanna zoom out even further and talk about BITO within the context of this evolving financial landscape.
Interesting. What aspects are you thinking about?
Well, we're living in a time of rapid technological change, shifting economic realities, and there's this growing interest in alternative investments, things
Yeah.
like Bitcoin.
Yeah.
So how does Bit2 fit into all of this, and what are the implications for investors like our listener who are trying to make sense of this whole new world?
Well, BITO, it really marked a turning point, I think, when it first emerged as that first U.S. Bitcoin-linked ETF.
Uh-huh.
It signaled that digital assets are starting to be accepted into that traditional financial system.
Right.
And it opened the door for a whole bunch of other Bitcoin ETFs and similar products, giving investors more and more ways to participate in this evolving space.
So it's like BitTo helped to break down a barrier, paving the way for greater access to digital asset investments.
Exactly. And I think this trend's going to continue.
Yeah.
As blockchain technology gets more advanced, as regulations become more clear, we'll see even more innovative investment products.
Mm.
It's a really exciting time to be watching this all unfold.
It certainly is.
Yeah.
But with any new frontier, there are always challenges. So what are some of the hurdles that BIPO and other digital asset investment products might face in the years to come?
Well, one of the biggest ones, as we've talked about, is regulatory uncertainty.
Right.
The rules around digital assets are still being worked out,
Mm-hmm.
and that lack of clarity can make investors a little bit hesitant.
Right. It's like navigating a ship through uncharted waters.
Yeah,
The currents could shift at any moment.
exactly. And then there's always the risk of fraud and scams.
Right.
Any emerging market attracts bad actors,
Yeah.
and the digital asset space is no exception. Investors need to be really careful, do their research, especially in this relatively new, less regulated environment.
So it's like venturing out into the Wild West. Gotta keep your eyes peeled. Gotta be on the lookout for traps.
Yeah, it's a good analogy.
Okay, so regulatory uncertainty, the risk of fraud, those are two big challenges. Anything else we should be highlighting?
Cybersecurity.
Yeah.
Digital assets are, by definition, digital,
Right.
which means they're vulnerable to hacking.
Right.
We've already seen some pretty big hacks in the cryptocurrency world.
Uh-huh.
And those kinds of incidents can really, really hurt investor confidence.
Yeah, so it's like guarding a digital treasure chest, knowing that there are pirates out there trying to break in and steal your loot.
Exactly.
Mhm.
Investors need to take cybersecurity seriously. Strong passwords, two-factor authentication, watching out for phishing scams, all of that is crucial.
Okay, so we've explored the benefits and the challenges of this convergence between traditional finance and digital assets.
Wow.
But now let's focus specifically on BITO's role in all of this.
Okay.
I'd love to hear your thoughts on how BITO's success or failure might impact the broader adoption of digital assets
Okay.
and the future of financial innovation.
That's a really interesting question. BITO's launch, it was definitely a pivotal moment. It kind of showed that digital assets are becoming more mainstream,
Right.
but its long-term impact, that remains to be seen.
So it's like a test case and the jury's still out.
Yeah, that's a good way to put it. If BITO continues to do well, it attracts more investors, tracks Bitcoin's price effectively, it could really pave the way for wider adoption
Wow.
and encourage more innovation.
So it's like a rising tide that lifts all boats
Exactly.
in the digital asset space.
Yeah. But on the other hand, if BITO struggles, if it has problems tracking the price or runs into regulatory issues, it could actually hurt the whole sector.
Okay, so the stakes are high.
They are.
BITO's performance could have a ripple effect throughout the entire financial world.
Yeah. It could really influence how they view digital assets for years to come.
That's a really important point. BITO is not just another ETF. It represents this much bigger shift that's happening in finance,
Yeah.
this move towards accepting and integrating digital assets.
Yeah.
And the outcome of that shift is still uncertain, with BITO's performance potentially playing a key role.
I agree. It's exciting, but it's also a little nerve-wracking.
Yeah.
just watching it all unfold.
Okay, let's zoom in on those regulations surrounding BITO and other Bitcoin ETFs. We've talked about regulatory uncertainty being one of the main challenges facing this whole asset class.
Right.
So what are some of the regulatory developments that investors should be watching for,
Yeah.
and how might those developments impact BITO's future?
All right. Well, the regulatory environment, it's constantly in flux, so staying informed is absolutely key.
So it's a moving target. Gotta be flexible.
You got it. Now, in the U.S., the key player is the SEC,
Mm-hmm.
and they've been pretty cautious about approving Bitcoin ETFs,
Hmm.
especially the ones that hold Bitcoin directly.
Yeah.
BITO got the green light because it uses those futures,
Uh-huh.
which the SEC seems a lot more comfortable with.
Okay.
But there's a lot of talk about whether they might eventually approve a spot Bitcoin ETF speaker.
Okay. So a spot Bitcoin ETF that would actually hold Bitcoin.
Right. Not just those futures contracts.
No.
That would be a huge deal. It could potentially bring in a whole flood of new investors.
Right, right.
But nobody knows for sure if or when the SEC will actually do that. The whole regulatory situation is still pretty messy and uncertain.
Okay, so regulatory approval, it could be a game changer.
Yeah.
But it's not a sure thing.
Nope.
And it's not just about the SEC either, right? Global regulations are all over the place.
Yeah, it's a real patchwork. Different countries have different rules, and it can get pretty confusing.
Okay, let's say I'm sold. I think BITO fits into my investment strategy.
Okay.
How should I think about actually adding it to my portfolio?
All right. Well, first things first. You gotta think about your goals and your risk tolerance.
Right.
BITO is not, it's not like a core holding like a broad market index fund or a diversified bond portfolio.
Uh-huh.
It's more of a satellite investment, a way to get exposure to a specific sector
Yeah.
that has potential for high growth,
Okay.
but also high risk.
Yeah. So start small, see how it performs, and don't go all in right away.
Exactly. And remember, diversification, diversification, diversification.
Right. Don't put all your eggs in one basket.
That's right. And there are other ways to invest in digital assets too. So do your research.
Okay.
Explore those options. BITOs is just one piece of the puzzle.
This deep dive it's been incredibly helpful. You've given me and hopefully our listener a lot to think about. Any final words of wisdom before we wrap things up?
I'd say just stay informed. The digital asset world, it's constantly changing.
Yeah.
Keep learning, keep asking questions. Knowledge is power, especially in a field like this.
Couldn't agree more. Well, listener, there you have it. We've taken a deep dive into the world of BITO, looked at how it works, the potential upsides, the risks involved. Hopefully, you now have the information you need to make a smart decision about whether BITO has a place in your investment strategy.
Yeah.
But remember, this is just the beginning of your exploration of Bitcoin and digital assets.
Right.
There's a whole universe out there. So keep exploring, keep learning, and keep that curiosity burning bright.
That was a great deep dive.
Me too. I always enjoy these opportunities to really get into the weeds on these fascinating topics.
Yeah.
Like we're learning right alongside our listener, and that's one of the things that makes the deep dive so rewarding. So until next time, fellow knowledge seekers, keep those brains engaged and those curiosity fires burning.
We'll be back soon
with another deep dive into a topic that you choose. All right, so we've really dug into BITO itself. But let's zoom out for a second and think about it within, the bigger picture of the whole financial world.
Okay.
It's a wild time to be an investor, right?
It is.
There are so many new technologies, new investment opportunities popping up all the time.
Yeah, the financial landscape is definitely changing.
Big time. And BITO, it's like this bridge between traditional finance and this new world of digital assets.
Right.
So how does BITO fit into this larger story of financial innovation, and what does it all mean for investors like our listener who are trying to make sense of all this?
Well, I think BITO's launch was a really big deal. It showed that digital assets are starting to gain some real acceptance in the mainstream financial world.
Yeah.
And it really opened the door for a whole bunch of other Bitcoin ETFs and similar products,
right?
Which gives investors more options to participate in this rapidly growing space.
So it's like BITO helped to break down a wall right?
Yeah.
It made it easier for people to get into digital asset investing.
Exactly. And I think that trend's only going to continue
Yeah.
as blockchain technology gets more advanced, as the regulations become more clear, we're going to see even more of these innovative investment products coming out.
It's exciting, isn't it?
It is.
It's like watching a whole new industry being born right in front of our eyes.
Yeah. Yeah. But of course, with any new frontier,
Right.
they're going to be challenging.
Absolutely. So what are some of the hurdles that BTO and these other digital asset investment products might face going forward?
Well, regulatory uncertainty is definitely still a big one.
Right.
We've talked about that a lot.
Uh-huh.
The rules they're still being figured out.
Yeah.
And that makes some investors nervous.
Understandably. It's like sailing through a storm, right? You don't know what's coming next.
Exactly. And then there's always the risk of fraud and scams. That's something that any emerging market has to deal with. And digital assets are no exception. Investors need to be so careful, do their homework.
Absolutely.
Especially in this environment where things are changing so quickly.
Yeah, it's like the Wild West out there. Gotta be ready for anything.
That's a good way to put it.
Okay, so we've got regulatory uncertainty, we've got the risk of fraud. Any other challenges that we should be aware of?
Cybersecurity. Digital assets, they're digital.
Right.
Which means they're targets for hackers.
Uh-huh.
We've seen some major hacks in the cryptocurrency world already.
Yeah.
And those can really shake investor confidence.
Right. So it's like you're guarding this treasure chest, but it's a digital treasure chest, so the locks are a little different.
Exactly. Investors need to be really smart about cybersecurity. Strong passwords, two-factor authentication, all that stuff.
Okay, so we've talked about the benefits and the challenges of this whole world of digital assets.
Yeah.
But let's get back to BITO.
Okay.
What are the key things that our listeners should be thinking about when deciding whether or not to invest in BITO specifically?
First and foremost, you got to understand your investment goals and your risk tolerance.
Right.
BITO, it's not a passive investment. It's tied to Bitcoin, and Bitcoin is volatile.
Yeah.
So if you're the kind of person who freaks out when your investments go down, even a little bit, BITO might not be the right fit for you.
So it sounds like it's more for those investors who are a little bit more comfortable with risk and who believe in Bitcoin for the long haul.
Yeah, that's a good way to put it. And it's important to remember that BITO is just one way to invest in Bitcoin.
Right.
There are other options out there, and they all have, different pros and cons. So it's worth exploring those and seeing what might be the best fit for you.
Yeah, don't put all your Bitcoin eggs in one basket.
Exactly. And finally, I'd say just to stay informed. This is a fast-moving space.
It is.
And things are changing all the time. So keep learning, stay up to date on the latest developments.
That's solid advice. So to wrap things up for our listener who's been on this BITO journey with us, what are the big takeaways they should walk away with?
Okay, well, the main one is that BITO offers a pretty straightforward way to tap into Bitcoin's potential.
Right.
Without having to deal with, cryptocurrency exchanges and digital wallets and all that stuff.
It's like Bitcoin with training wheels, I guess.
Something like that.
Yeah.
But it's important to remember that BITO comes with risks.
Right.
Its value is tied to Bitcoin, so you got to be prepared for that volatility. And there are the risks associated with those futures contracts, the regulatory uncertainty.
Yeah.
All of that.
Okay, so not a get-rich-quick scheme.
No.
It's an investment that needs to be carefully considered.
Absolutely. And finally, BITO it's just one way to invest in the Bitcoin world.
Right.
There are other options,
Yeah.
and it's worth researching those and figuring out what might be the best fit for your individual needs.
Okay, so to leave our listener with one final thought, a question to ponder as they continue their BITO research, what's something they should be asking themselves that we didn't really cover today, but that could really shape their investment strategy?
I'd say the most important question is, what do I think about the future of Bitcoin?
Right.
Do you believe in it? Do you think it's going to be a big deal in the long run?
Right.
Or is it just a fad?
Uh-huh.
Because your belief in Bitcoin is going to determine whether BITO is the right investment for you.
That's a really good point. It's like looking past the ETF itself and thinking about the bigger picture.
Yes, exactly.
The potential of Bitcoin, but also the uncertainty.
BITO is just a vehicle.
Yeah.
The fuel is Bitcoin.
Well said. Well, on that note, I think we'll wrap up this deep dive.
Sounds good.
We've covered a lot today.
We have.
We've talked about BITO, how it works, the good, the bad, the potential, the risks.
Wow.
We've even gone into this whole world of digital assets and the future of finance.
Yeah.
So hopefully our listener is walking away feeling a little bit more confident,
I hope so.
a little bit more knowledgeable
Me too.
about this whole world of BITO and Bitcoin and everything in between.
It's been a great discussion.
Yeah, it has. And it's always fun to dive into these fascinating topics with you.
Likewise.
And hopefully help our listener make sense of the crazy world of finance.
It can be a bit overwhelming.
It can.
Yeah.
So until next time, fellow knowledge seekers, keep those brains buzzing and those curiosity fires burning.
Stay curious.
We'll be back soon with another deep dive into a topic that you choose.